Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Friday non-farm payroll morning. Take a look at the 8:30 candle there. That is the NFP release. Now, if you're wondering, Rob, okay, how do we even digest what these numbers mean? I know that these are important numbers. The Federal Reserve, if you've been watching this show for any length of time, you know the Federal Reserve has what's known as a dual mandate. They have, on one hand, what it is they need to do with rates. Let me get the calendar here. There we go. They have an objective with rates, obviously that inflation conversation, which, by the way, we had that PCE the other day, and wasn't a huge mover, but it was generally bullish. And then now we have this NFP, non-farm payroll. There's a lot of layers to the non-farm payroll. It is a 17-layer chocolate cake. And the headline numbers are, of course, unemployment rate, the employment change itself, and the average hourly earnings. It takes probably 10 to 12 minutes for that data to be fully digested because there's lots of numbers underneath the headline. It could be sector specific, it could be employment specific, not just these big numbers. But this is where that initial and immediate reaction comes from. All right, so NFP is, as you can see there, pretty darn good. Good related to what? Well, good related to the fact that expectations were 138,000. We printed 177. What's really interesting about this is the previous number was significantly revised lower. Last time we saw NFP, so that would have been back in April, that would have been March's number, they printed a 228. In reality, they kind of go back and go, well, we need to recount our count, and it was actually 185. So remember, this is a mix. This is a pretty significant revision of the previous number downward, while the current number, the number that reflects April's jobs, were better than expected. Unemployment rate is flat as a pancake. Average hourly earnings ticked down a tenth. But ultimately, rather than trying to figure out, well, Rod, what does this mean? I look at this as a secondary, if not even after I look at price, and I'll look at this thing, because the reason we're all watching this data anyways is to get an idea of whether or not the Federal Reserve, probably the biggest reason, there's many reasons, but probably the biggest reason is, what does this mean to what the Federal Reserve is expected to do? There is zero expectation that next week we're going to get a rate cut. There never really was. And you can see here that's going to hold. That's a 99.4% expectation of a hold. Go out to June. Well, now this is interesting. June now, this has been going back and forth between maybe a cut in June or maybe a hold. This is still a coin flip, 55.1% hold, 44.3% cut. So this is favoring a little bit that hold. Going out to July, the cut is fully baked in. We are going to get a cut based on the data come July. So maybe June, but by definitely July, we'll be at that lower rate by probably a quarter point. That's the data. It's always changing, but that's our job, right? Just like we watch changing price, we look at the rate of change of the impact of data. And that's where we sit, both from a price perspective. As a trader, I'm going to start the morning as in my day trading hour. That's my power hour for day trading, 9:30 to 10:30. Most of my setups, whether they be futures related, whether they be options related, most of the setups, the things that I'm looking for, the patterns, the readings, the signals, are going to be in that first hour of the day. And by the way, that's going to be really important for those of you that also like to trade the SPX. The way that I teach our Sector Secrets Mastery traders, SPX is, kind of different. I don't think most people do this, which is long calls, long puts. Can you do that with the SPX? You absolutely can. But again, that time of day is so important. So most of my day trading, first hour of the day. After that, I'll segue over to swing trading and take a look at overnight positions that I might hold for days to weeks. Now, when I take a look at the ES this morning, I got to wonder, where have all the bears gone? Where are all those giant crash, hypotheses? Where are they? Look, the price action typically dictates the tone of analysis. And, I mention to my members all the time, nobody needs another opinion. We want to know, Rog, what do you got? And this could be anybody. Don't tell me what you think. Don't tell me what could happen. This isn't bedtime storytelling. This is, Rog, show me your book, right? I'll know what you're thinking by what you have. So let's talk about that. And of course, as I'm sharing with you the trades that we've got open in the Sector Secrets Mastery, please let me know what symbols you're looking at. What are those setups that you're looking to put on? And we'll break those down while we're here together. So first up is it's Kroger. We've been long Kroger. Now, why Kroger, Rob? What a weird thing. Aren't all these crazy earnings coming out this week? Exactly. I want nothing to do with that mosh pit. Anyone going to mosh pit before? I haven't, but I've seen people emerge with black eyes and bruised ribs. I don't want to do that. I'm not going to go headlong into the headline narratives of whatever Apple has done. Whatever it does, let it do. When the dust settles and I can see what those setups might be, I'll re-engage, right? But in the meantime, I'll trade around those narratives. I'll look at Kroger. We have a long position there. We do have an optional scale out. I'm still looking for my T1, but this is a nice profitable trade. The other one is Walmart. We have not only a longer term account growth. What's longer term, Rob? Now let's get specific to the timeline. That timeline is minimum 6 months to hopefully years, especially if it's a dividend yielding name, right? That's account growth with that longer term position trading mindset on front of mind. So we have Walmart as a swing trade, which is days to weeks, but we also have Walmart as a position trade from $80.50, I believe, from Q1. So, or was it 81? I have to go back and remember. It's been 4 months, but we have that longer term position also in Walmart. So we can take a look at a single symbol and say, hey, there might be a day trade. There could be a swing trade. And yes, there could be that account growth, longer term position trade. Walmart continues to be a great trade. This one's practically a double at this point. It is the May 16 expiration. And I've got the 90 calls. All right, a couple new trades we put on yesterday. A lot of you know, because I was talking about it in Charts and Coffee, I was interested in gold, still am, and it's a long position that we built. We were really patient about gold, though. We did not get in early in the morning. What we waited for is for gold to sort of settle down, because gold continues to trade outside of the typical price movement ranges based on historical volatility. So it makes sense to be patient. Very rarely am I rewarded for getting into a swing quickly. I'm usually rewarded for being patient, usually the second half of the morning or even the second half of the day, the PM session, the afternoon session. So even though gold is down a little bit, and you saw the lows yesterday, we're positioned really nicely. We've already scaled out at an optional target, and we're looking for more in gold. So waiting for that precise trigger to get in at, especially when you're a dip buyer, affords you the luxury of two things: lower risk, and what I love, higher reward. And it gives us a lot more choice. Rather than buying with the momentum higher, it gives us a lot more choice to scale out at optional levels and skew that risk reward in our favor. So along with gold, which I still like, I took two other trades. And these are probably going to be a little unusual unless you're really pretty well versed in gold miners. If gold is moving, gold miners are interesting. If oil is moving, maybe oil services is interesting. So the other setup we did is we go into our layout here, which is this is the Sector Secrets Mastery multi-chart layout. It's a flexible grid in Thinkorswim, but arranged in a very specific way. The upper left-hand corner is the broader sector or that ETF or an index. And then the rest of the stocks are aligned in the order of their weighting. So it's a unique layout, and this is the heart of the Sector Secrets Mastery process for picking trades. The other two setups we looked at were Wheaton and AEM. Now, Wheaton's a little tricky because earnings are very close, so it's not ideal. I like to be avoiding that crunch of earnings and the implied volatility increase, but I'm going to be closing that trade before earnings. Again, that's something unique to what we do in the mastery. Most folks are entering trades with earnings. We're taking advantage of the move to earnings, but not through earnings. So Wheaton and AEM were two other positions we took alongside that gold trade. And the last one was crude oil. We set up a short in crude oil or long puts in the USO. That's what I've got. So, okay, Rog, you're bullish gold and gold miners. Yes, you're bullish some of these stocks that are not necessarily directly related to the Apple, Amazon, that slew of Mag 7, 4 of them, earnings that we had this week. Absolutely. I want nothing to do with that volatility because it could be very abrupt. One of the reasons I did not take XLE or any oil setups with crude was because Exxon and Chevron are reporting today. And then that means that I can look at those possibly next week once that dust settles. So again, we don't need, look, none of us here need more analysis. None of us here need more prognosticating. Talk your book. That's going to tell everyone. That's what I tell my mastery folks. Talk your book. That's going to tell everyone what it is you're looking at and why. Am I optimistic and bullish? Well, I'll give you another thing that we did in the mastery. This is a weekly chart of the SPY. When the fear was at its maximum and SPY finally, actually using ES, finally was down 20% from the all-time high, we bought SPY. To tell you that's actually a fantastic trade is an understatement, right? We are absolutely seeing that recovery from that 20%. And again, if you've been watching Charts and Coffee or even our top tier outlook, this is one of these setups that I discussed openly to everybody because this is one of those setups that I teach. A lot of my, I have nieces and nephews, as many of you do too. And a lot of them find out, hey, Auntie Raghee, you're, a trader. I want to get started. They're on Robinhood. So I teach them, they get on their phone. They allot a certain number of dollars. I don't even think most of them know how many shares they're buying. They just know, Raghee, I can buy, I got birthday money, Christmas money, whatever, and I can buy some stock. What should I do? Open up a Robinhood account. That's what I tell them. It's a great platform, by the way, if you're trying to get, the kids into the stock market. And boy, I'll tell you what, they love it. Once they realize what it's all about, and it's a video game that can actually pay them, they're hooked. So this nephew of mine, he knows 20% pullback, get long SPY. I would imagine he might be outperforming some hedge funds at this point. We did the same thing in the mastery. And there's a number of setups like that. Coke is another one that we did in Q1. Fantastic move since we've been long. That was from 61. Altria, that was from 51. So please, please, please keep in mind, right? Keep in mind that longer term, especially with the kind of volatility and fear that we have now, because the trade isn't about today. And it's not about 2 weeks from now or even 2 months from now. If we're sitting here, May 2, 2026, I don't know what's going to happen, but I do know there's a natural drift to certain types of stocks that are in a certain trend on the weekly. So why not play those probabilities? We're not in the prediction game. This is not about me telling you where we're going to be in May of 2026. That's bananas, right? You know how logical that is? Sitting here telling anyone what's going to happen a month or a year from now is like, well, NHL hockey season, right? Go Panthers. Can anyone tell me who's going to win the Stanley Cup and in how many games and what the scores will be? That's kind of what's normalized on television. People will actually get on TV and tell you, so-and-so is going to win the Stanley Cup. They're going to do it, within 5 games, and the winning score is going to be 4-3, right? And that's where somehow or other, the common sense of we can't predict the future is lost when it comes to financial markets. All we can do is play probabilities. All right. So keep that in mind, play the probability. And by the way, what's the probability in the stock market, gang? The drift over the last 50 years, 60 years, right? Most definitely since the 80s, which now we're talking 40 years, right? It's up, right? Whatever the reason is for the end of the world, here we are, right? Here we are. So please, please, please keep that in mind. There's a lot we can do with that longer term position trading. And if that's not something that you're doing now, please open up some weekly charts. Maybe look at the stocks you own right now and ask yourself, where do I own them from? What's my cost basis? What's the plan for this trade? How would I continue to build on that symbol that I might like? Do I have some dividend yielding stocks? What's my time horizon? Is this money I need to touch in 5 years, 25 years? It's all a trade to me. It's all a trade. So hopefully that's something that by watching Charts and Coffee, you've got a little bit more curious about. All right. Let me know what symbols you are interested in, and I'll just continue on with what we're doing in the mastery. And let's see. Good morning. Good morning. Good to see everyone. Hey there, D. Bolton, Matt, Renee. Good morning, TD Zone. All right. So next thing I want to take a look at is, let's go take a look at what's going on with the with the broader averages. Let's take a look at a 5-minute chart and see what's going on with the broader averages. Okay, there's your 8:30 response. There's the follow through. And it's really important to give that non-farm payroll about 10 minutes to fully get digested. And then the follow through after that first 10, maybe 12 minutes is going to be pretty insightful. One of the things we talk about is this notion of an echo. So remember, the only things open at 8:30 are futures, right? Futures and Forex. There's a whole group of traders. Some of us are stock and stock options traders. I like to trade futures too, but there's going to be that second group at the bell that get to respond to the data that triggered an hour ago. So a lot of times we'll get an echo, a follow through of that data. Sometimes folks will look for a gap close or some sort of fade of that strength. Sure, that can happen, but I'm going to ask myself, with the non-farm payroll triggering the bullishness at 8:30, would I think that at 9:30 stock and options traders are thinking, no, yeah, we think that's bearish? Probably not. I don't want to assume, right? But we're going to keep an eye on the long side of this morning with the indices for sure. Bonds are down and gold's a little heavy, but not terribly so. So we'll continue to see what's happening on those commodities. I'd like to see crude oil back down, which is getting right back down through $59 a barrel. So that crude oil short that we have via either crude oil futures, MCL, which is micro crude oil futures, or the USO puts, seems to be right in line. All right, so that's what we've got there. TD Zone's asking about AAL. Sure. So when we're talking about AAL, think about, again, this is how we think about any individual stock in the Sector Secrets Master. That's one stock, right? What is it a part of? Jets, XLI. So I always want to know where this stock is within the group of other stocks that are like it, of its ilk. And in this case, AAL on the daily continues to be really heavy. I would not get bullish AAL on the daily time frame. Now, if you ask me the weekly, might it be a slightly different answer? Maybe. If you ask me on the weekly, it could be a slightly different answer. Yeah, it could actually be. I would not, and AAL is, sub $10 stock. So another thing that I would mention, TD Zone, one of the things we do a lot in the mastery is we look at price-based volume. So I might recommend, especially with something like this, I would say, you've got a lot of size that's dug its heels in at about $9.50. Again, depends on your time frame. For a daily time frame, TD, I would be thinking days to weeks, maybe a month. But when I get out to multiple months or years, that's going to be the weekly. So AAL, I would be cautiously optimistic to the upside on the weekly. I'd be very hesitant to do anything unless you really want to take a shot at that 9 to 9.5 level with a fairly tight stop. Because if we break $8.50, that could be problematic. Okay, this would not be a long position for me, but a couple things have happened as of late on the daily. The downtrend as of yesterday is starting to wobble. So that's the first step if you're looking for a long. You don't want to buy a stock in a downtrend, right? Okay, number two is we're getting those neutral yellow candles. Notice how everything's so visually present. So I can just take a look at the colors and a few lines of indicators and say, okay, we're trying to break the downtrend. It's a little early, but we're seeing some signs of neutral. Well, neutral's not down. It's not up yet. But before we go up, we got to stop going down. I know that sounds basic, but a lot of traders forget. We're early on that. So I'd keep an eye. All right, EQT. Renee, what do we have here on EQT? This is a very choppy environment. So what I would say on daily chart of EQT, all right, is you've got a Darvis. I would say focus on the lower half of the Darvis, preferably under $49.50 all the way down to $47.20, preferably even the lower quarter of this automated range, and then look for a move back up to 52. That would be the oversold part of this range. And then if there's enough momentum to take out 52, you could get the momentum leg of that trade. But I would start off with the oversold positioning and then capitalize, sort of like the cherry on top of having the breakthrough 52 be that next leg. All right, gang, I am out of time. As always, thanks for being here. Get those questions in early. I will see you all on Sunday for the top tier outlook. Have a great Friday. Have a great weekend, and be good to each other.